This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended gains on Tuesday as the market eyed U.S. output concerns in the aftermath of Hurricane Francine and expectations of lower U.S. crude stockpiles. Brent crude futures for November were up 36 cents, or 0.5%, at $73.11 a barrel, as of 0635 GMT. U.S. crude futures for October climbed 53 cents, or 0.8%, to $70.62 a barrel. Both contracts settled higher in the previous session as the impact of Hurricane Francine on the output in the U.S. Gulf of Mexico countered Chinese demand concerns ahead of the U.S. Federal Reserve's interest rate cut decision this week, which should prove positive for investor sentiment in oil.
Top energy executives and ministers will meet in Houston this week for the annual Gastech conference, with U.S. markets in focus as booming liquefied natural gas, LNG, exports help wean Europe off Russian gas and as Asia moves away from coal. The U.S., once an importer of LNG, has surpassed Qatar as the world's top exporter, with new technology allowing America's shale producers to tap massive reserves. Both countries have major LNG expansion projects underway, playing greater importance in global markets from Europe to Asia. The conference comes to the U.S. for the first time since 2019 as the country has also become the world's biggest natural gas producer. U.S. natural gas production grew 4% last year to 125 billion cubic feet per day, BCF/d. Exports of the supercooled gas jumped 12% to 11.9 BCF/d.
Moving on to the top news in the energy sector.
Russia's primary oil refining capacity is expected to rise in the second half of September as refineries are wrapping up their maintenance, according to Reuters calculations based on data from industry sources. Total offline capacity for the whole month is still seen remaining the same as calculated last week, at around 3.9 million tons, jumping 34% in September from August. According to the data from the sources, Russia's average offline oil refining capacity is expected at 119,600 metric tons per day between September 16 and 30, down from 145,600 tons per day in the first half of the month.
Less than 2 months ahead of the COP29 United Nations Climate Summit, the Azerbaijani leadership laid out its plans on Tuesday for what it hoped to achieve, as countries continue to wrestle with how to raise ambitions for a new financing target. The main task for the November summit is for countries to agree on a new annual target for funding that wealthy countries will pay to help poorer nations cope with climate change. Many developing countries say they cannot upgrade their targets to cut emissions faster without first receiving more financial support to invest in doing this. With countries remaining far from agreement on the financing goal, the COP29 presidency this week outlined more than a dozen side initiatives that could raise ambitions, but do not require party negotiation and building consensus, which can hamper progress. Next, we have the top news in metal markets. Copper prices in London edged up on Tuesday, driven by a softer U.S. dollar and expectations of an interest rate reduction by the Federal Reserve a day later. 3-month copper on the London Metal Exchange rose 0.1% to $9,395 per metric ton by 0406 GMT, and nickel edged up 0.2% at $16,310. LME aluminium eased 0.1% to $2,525. Lead dipped 0.2% at $2,035 and tin fell 0.3% to $31,850 a ton, while zinc traded nearly flat at $2,945. A weak dollar brought by aggressive rate cut hopes underpinned commodities, while copper also benefited from slowing inventory inflows and tight mine supply, said Sandeep Daga, a director at Metal Intelligence Center.
Gold prices held steady on Tuesday after hitting a record high in the previous session, while focus shifted to the U.S. interest rate verdict, with many investors leaning towards a bigger-than-expected rate reduction. Spot gold held its ground at $2,577.98 per ounce, as of 0542 GMT. Bullion rose to a record high of $2,589.59 on Monday. U.S. gold futures were also steady at $2,605.80. The rally in gold prices has taken a breather in today's session, said IG market strategist Yi-Jun Rong, adding that after recent gains driven by expectations of a more aggressive rate cut, there's now some caution as investors await further clarity from policymakers.
We will now look at the top news in the agricultural sector.
Malaysian palm oil futures slipped on Tuesday, when the market reopened after a holiday, weighed down by India's decision to raise its import tax on edible oils. The benchmark palm oil contract for December delivery on the Bursa Malaysia Derivatives Exchange was down 60 ringgit, or 1.59%, at 3,715 ringgit, $868.60, a metric ton by the midday break. Malaysian palm oil futures slipped due to India hiking import duty, a Kuala Lumpur-based trader said. India, the biggest importer of edible oils, imposed a 20% basic customs duty on crude palm oil, crude soy oil and crude sunflower oil from September 14th.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.